new month, and here we again together with Alexander to analyze markets. So we are going to speak about current market situation, about Netflix, about Tesla, and other many stocks. So I want to welcome everyone. I want to welcome you, Alexander, on our new class. And as usual, I will start with short introduction. And the first is most important to aware everyone about risks, because trading and investing, it's contain risk for sure. So we need to understand how market works and how to use risks on risk management and money management for a proper trading approach. For those who participate on very first time on our classes and just came to Admirals, so I want to say some words about our company. So we are a global wallet brokerage company. So we work in different countries. We operate, let's say, and have, let's say, licenses in Cyprus, in Jordan, in South Africa. We recently got a license in Canada, in Australia, and we work, as I said, on pretty much all the world. So main service which we offer to our clients is trading and investing. So we provide different platforms like MT4 and MT5 platform, and we also released not so long ago our native Admirals platform, which is available in our dashboard. And for that, we also have our native mobile app, which is allowed to manage your investing portfolio and trading positions in your smartphone. I also want to use this chance and invite you to our sessions, which we have in the Market Talk series. So our next guest next week will be John Bollinger. I believe you heard about him, and maybe some of you use his indicators. So I really want to invite you to this class, which we are going to have next week. And just as we pay a lot of attention to education, because we understand that trading and investing is not, sometimes it's simple, sometimes it's not, but we try to bring more context into this activity. So I want to encourage you to subscribe to our YouTube channel and our Telegram channel, because on YouTube channel, after this class, you will be able to find recording, or if you miss our live class, the recording will be available there. And also we have a contest where the prize is a book written by Alexander, his latest book, The New Trading for a Living, with his personal signature, but I will tell some words about this in the end of our class, and also our Telegram channel. So for usual agenda, we're going to speak about markets, of course, and we'll discuss current situation. So is it's already a bull market? Is it exist? And we're going to through different markets like DAX 40, EURUSD, gold, and oil. We'll also discuss, let's say, some stocks, and in the end of our class, we'll have chance to answer. Alexander will have some chance to answer questions from our participants, and I will say some words how to use Alexander's indicators in MT5 platform, and we'll say some words about contest. So as usual, the heat map of markets for previous months, for current months, but before each class I do it. So it's pretty much green, not a lot, let's say, everywhere. We don't see, let's say, a lot of 20%, 30% growth. So as Alexander said before we started recording, it was quite boring for today. But in general, it's also looks like average, not big movements. Of course, it was, let's say, some companies. So we are going to discuss them like Tesla, which hiked a lot for past months, and let's say some companies which dropped a lot also for past months. So from my side, that's it. I want to pass microphone to Alexander. As I said, Alexander is a professional trader, a teacher of traders, and they're also of a great, really great book, The New Trading for a Living. It's not only the one book, it's the latest book. Alexander, the floor is yours.
Thank you very much. Thank you, Roman, for this kind introduction. I hope the sound is okay.
Yes, I hear you.
So, as you know, I was holding on to my bear market thought for a long time, but I set clear parameters at which we will have to recognize a bull market. And those parameters have been hit. So we will be looking at that. We'll be looking at that a little later. Many years ago, I met this hugely famous market expert. He's been dead now for many years, Joe Granville. He was the man who really brought volume into market analytics. And at one point, he became very wrong in the market. He was waiting for the bear, waiting for the bear, waiting for the bear. And we had a huge bull market back. It was back in the 80s in the US. He told me that at the same time, his wife had a little drinking problem. She was drinking 1 or 2 bottles of vodka a day, a little drinking problem. And one of those days, she came into his trading office and she said, "Joe, I decided to stop drinking." I said, "Oh, that's good, okay." I didn't believe her, but she stopped drinking for a day, for 2, for a week, for several weeks. And finally, he realized that the wife was already sober and he was still wrong on the market. He called every journalist he knew and he said, "I'm now a bull." His wife gave him an example to recognize reality. In any case, that was a long time ago, decades ago. Joe was a great guy. Wrote several important books, which are very little known today. But here we're looking at the chart of the S&P. And looking at the weekly chart on the left, I remember saying for several months that a bear market is defined by a pattern of lower lows and lower highs. And you can see how this from the left corner of the chart going down, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then we have a high, the high established in February at approximately 4,200 level of the S&P. After that, we had a higher low, and I've said repeatedly, if the market decisively breaks above that line, not just for 2-3 days and then go back, but decisively breaks above that line, I will have to recognize a bull market. And of course, that happened just about a month ago. This is certainly a very decisive breakout here. Right now, the market is, the S&P is overbought. You can see how on the weekly chart, it's hitting its upper channel line. And that's really the sign that the market is getting a little bubbly, a little hyperactive. If we go to the right side of the screen, to the daily chart, we can see that the S&P went outside of its channel last week. It's now pulling back a little bit this week. At the same time, if we look at the bottom, very bottom pane on the right, the force index, and you can see how the force index is getting weaker and weaker. So the market is entering a correction, but it's most certainly, it's a correction within a bull market. So what do we do? Well, it takes more than one chart to decide, of course, but in general, a strategic decision in a situation like that, we wait for a pullback to value. We wait for the market to come into the space between the two moving averages. A fast moving average, it's drawn here in red, identifies average market consensus in the short run, the slow moving average in the long run. And somewhere in that zone between the two moving averages, that's what they call the value zone. That's where I want to go shopping. In that zone, maybe a little, depending on either inside the zone or slightly below the zone. But at this point, there is a correction of a bullish move going on. That's my view of the U.S. market. Let's take a look maybe what's next on our schedule, Roman. I think it's the DAX you usually like to see next.
Mm-hmm. Yep, open DAX 40.
You can see that the DAX is considerably weaker than the S&P. On the left, on the weekly chart, last week the DAX had a false upside breakout, which to me is one of the most important patterns in technical analysis. There was a peak a couple of months earlier, and then last week the DAX broke out above it and immediately returned. So we have a false upside breakout. We have a massive bearish divergence of MACD histogram, also of force index. Nasty picture. If we go to the right side of the chart, to the daily, here again, we see this false upside breakout. And Roman, maybe you can draw a line, a horizontal line across the May peak. Yeah, a little higher maybe, yeah, something here, right? You can see how last week the DAX broke to a new high and survived there for only one day. It's been sinking since then. It now sank below its value zone. Below its value zone. There was also a bearish divergence of MACD histogram. So there is a bit of a panic going on in the DAX. If I don't trade the DAX, I have enough to do in the United States. But if I was trading the DAX, I would look to buy it. But in order for me to buy, I would have to see it stop doing something that it's done for the last 3 days. It did it Monday, Tuesday, and Wednesday. Look at the dynamic of every bar. Starting with 3 days ago, it opens high and it closes low. Bears win the day. Second, on Tuesday, it opens high and closes low. Bears win the day. And today, again, it opened high and it's now trading low at a new low for the week. So such a simple thing as just looking at those price bars tells you a lot about what's the power structure in the market. So without a doubt, this week, bears are in charge. 3 days is a long time for a short-term trade. So it's too late, for me, it's too late to sell short. Shorting should be done when prices are above value. Now the DAX is below value. That's it. Short, if you caught it, wonderful. If you missed it, wait for the next bus. But now I will be looking for the decline to stop and for the new dynamic to come in, for DAX to close higher than it opened. And if I see that, then the next day I will be interested in buying this thing. If I traded the DAX, which, as I said, I don't. The bull market hasn't been canceled in the DAX yet. So, but in the short run, we've got to wait. Yes.
Thank you, Alexander. Let's look at EURUSD.
Well, you can see here. Well, first of all, on the left side, there is this really striking bearish false breakout with the bearish divergence. You can see peak A in October, peak B, I guess about February, and compare the height of MACD histogram in October and in February. And what's very important, there is a crossover of the zero line between the peaks, because you have to have that crossover to have a valid legal bearish divergence. So it's a very strong selling signal, which I think we discussed last month. What happened next? The euro dropped, went below value, and now it's recoiling. It's recoiled from that value on the weekly chart. And on the daily, it's actually hitting overbought zone near the upper channel line. When I look at something like that, I hang back. I don't see a trade happening here immediately. I really want to see how this instrument will behave when it approaches its January peak. If it begins to stall and the MACD histogram traces another divergence, I'll be a very happy bear. If it continues going higher, obviously I'm going to say I missed to buy it when buying was good, and the buying was good when prices came back into or below value. So if you think that the major trend is still up, I cannot doubt it, because this bearish divergence of a MACD histogram on the left is just so ridiculously strong. It's such a strong bearish sign that I suspect that the more likely outcome is a rally towards the recent top and then another drive down. That's what I would be prepared for. We'll see.
Thank you, Alexander. Let's look at gold.
Well, somebody is bombing gold and not having very much success. On the left, you can see that gold is trading on the left. I mean, on the weekly chart, we can see that gold is trading slightly below value, and when we look at MACD histogram, we see that it's very low. It's comparable to previous important bottoms. We look at the force index. Force index is low and below -3 ATR. So there is a major panic going on in gold, and people are afraid. And as I said, they're bombing gold, but it's losing a little bit of altitude, but it's refusing to collapse. We see it better on the daily chart, and here we can see one bombing run after another. They're trying to knock gold down, and they actually tried to knock it again down today. And what do we see? It's a false downside breakout. Gold opened flat with yesterday, dropped to a new low for the month, and now it's trading off of the lows, well off of the lows. If we look at MACD histogram, we see a beautiful bullish pattern. You can, if you look in May, how low MACD histogram was, and now prices are much lower, and that's how low it is. Night and day. Same picture with the force index. So now my system, the impulse system, does not allow me to buy right now, because both the weekly and the daily impulse systems are red. You can see the central strips show you that the impulse system is red on the weekly, red on the daily. As soon as the red disappears, I would be inclined to go shopping. And it will disappear when either a MACD histogram ticks up or prices rise above the red line, above the fast-moving average.
Thank you, Alexander. Let's look at oil.
You see a similarity to gold, I hope. Well, first of all, there is this absolutely gorgeous bearish divergence near the left side of the weekly chart. You see this tremendous spike in gold. That was the invasion of Ukraine, and everybody feared disruptions. Now it turns out that the world can live very well without Russian oil. There was a second rally, and compare the height of a MACD histogram on the first and the second rallies. I mean, that's a massive divergence. It was followed by a bear market. Oil is now cheaper than it was before the war. Plenty of oil. And the similarity with gold is that for the last couple of months, somebody has been bombing this gold. By bombing, I mean selling. Gold keeps hitting its lows, keeps breaking below the previous low and retreating. It won't stay down, but it constantly pushes down and then floats up again. If you look at a MACD histogram, you can compare its depth in the middle of the chart and its depth today. Same for force index. Compare its depth in September of last year and today. Just the bears have lost power. So, and the impulse system, by the way, here it gets interesting. The impulse system is blue. That's the strip in the middle of the chart. And I'm sure Roman will talk to you about how you can get the software from Admirals. The blue bar on the central strip means that it's legal to buy gold. It was not legal while the strip was red, now it's blue. We go to the right side of the chart, and we can see very clearly here, one after another, there are attempts to break to a new low, and oil is just not going. Forget about it. He doesn't want to be there. The prices, as we speak, prices are above value and above their moving averages. So this looks like it looks like a beginning of a bull market in crude oil. Now, I could be wrong. Maybe it's just another fake rally and it goes further down. I think the technical signals are so strong that I believe a rally, a really serious, a new bull market is more likely than a collapse. But of course, I don't have any magic crystal ball to look into the future. So if you're planning to do any shopping in crude oil or related stocks, if you will, you have to use money management. Methods of risk control are described in detail in my latest book, which Roman mentioned. So consider me a cautious bull here.
Thank you, Alexander. Let's look at Bitcoin, just in case.
So strange, it's up today. It got bombed. Wow, this is serious business. Wow. Wow. You know, Bitcoin went down when the US government started going after this Binance company. Now suddenly everybody's attention is turned to how American companies are getting into different aspects of Bitcoin. I think it's BlackRock Management, which is one of the biggest money managers in the world. They're starting a Bitcoin exchange, and it will have all these tools. So we'll see. But certainly, it's very bullish on the weekly chart. But the daily chart says, don't forget caution, because a move like that, with prices closing above the envelope, it's not, it's toppy. It's very, very high. It's not anywhere near value.
Okay, thank you, Alexander. And also, as I wrote you, I got, let's say, one suggestion from one of our participants about India. And about India. Indian market.
Yes. I understand.
And I just also explained to our participants. And I decided to add, let's say, one instrument which we have in our portfolio. It's Indian ETF from iShares. So just to look, maybe, because we normally look on those markets which we just look, and maybe to add and to hear your opinion about, let's say, the chart, of course, and maybe about market in general.
Well, India is undergoing fundamentally undergoing changes. They're opening the markets a bit. It's a hugely conservative country. I don't know if you have been to India. It's very traditional. It's tremendous. It's very caste oriented. rigid, very rigid system. But they've got this president now for several, prime minister for for many years, who seems to be really determined to make India modern. At the same time, a lot of manufacturers are moving from China to India because India is now becoming cheaper than China. Plus, it's a stable democracy, so there is no political risk. You know, they're not taking foreign executives hostage when they want some Chinese person returned to China. So fundamentally, India is getting much better. It's a slow process, obviously. Looking at this chart, let's begin with the weekly chart. If we compress it a bit, so we see fantastic, a little more. Roman, if you could draw a horizontal line below this 22 low.
Here is good.
Yeah, it's very good. And if let's expand the chart now. You see this false downside breakout, which I kept saying again and again. This is the best, one of the best signals in trading, and very simple, by the way. You know, if you draw a line, Roman, above, let's say, July high. Yeah, this one. You see, how about this false upside breakout? I mean, when I trade, and I'm a fairly short-term trader, I seldom hold position longer than 2 weeks. But when I trade, these are the things I'm looking for: a breakout to a new high, and price fails to hold there. I trade in the opposite direction. Looking at this weekly chart, there was certainly a very attractive buy signal in India in March, when India broke to a new low for I don't know, for multiple years, 2 or 3 years, and didn't find support, didn't find trading interest there, and went up. And so there is a very nice uptrend currently on the Indian chart. It's not a bargain anymore, but the bull market is on. So I'm not sure it's such a great time for a long-term investment, you know, something you might want to hold for a year or 6 months. But I would now look at the daily chart, because I would think that it'll be very likely we'll find some buying opportunities there. Let's look at the daily. The daily chart really throws the system at you in your face. Take it and enjoy. Look, there is a very orderly bull market going on. And every month or so, there's a bit of a panic. And here in April, Indian market breaks breaks below value and rallies to the upper channel line again. Take profits. Below value to the upper channel line. Take profits. Don't be greedy. Don't overstay. Again, what is it? End of May. Below value, and it kind of, and then eventually it goes and hits the upper channel line. So below value, and just last week it hit the upper channel line again. So I would sit patiently and wait, likely to happen in a couple of days, to place a buy order within the value zone. So bullish. The weekly trend is bullish, and the daily trend is a little too high, but I think it's likely to give a buying signal next, well, maybe end of this week or next week, when prices decline below value.
Thank you, Alexander. Thank you for your review of different markets. And now it's time to announce the winner of our contest for a previous month and to look at his trade. So we don't have, let's say, a lot of participants in the contest so far. So that's why I want to mention it again. We have it on our YouTube channel each month, and it's quite interesting to participate. I will explain the rules about this in the end of our class. But let's look on the position. So it's actually interesting because it's Netflix. And this position, it's short on Netflix, which was suggested a couple of days ago. So in the current moment, it's in profit, like around 3%. And the person who suggested this position will get the price. And probably as we are at the beginning right now of this position, so here on the chart I added, let's say, where it was suggested and the price on very top on a weekly chart and also on a daily chart, and also I added a take profit like on 405. So just to hear your opinion about this position, about suggested take profit, because it was executed a couple of days ago.
Well, one second. Didn't you say it was a short? Wait, did I miss something? You said it was a short trade, or no?
Short, yes.
Oh, so this red dot indicates where it was shorted?
Here, on very top on the previous week.
Brilliant. You know, that, let me look at my computer for a second, because that dot actually covers the top of the chart, and I want to see whether there was a false breakout or not. Okay, so three bars. So 4 bars ago, the high was 448.65, and 3 days ago 447.50. So there was really actually no false breakout, but certainly tremendous execution. How the guy did it, I don't know, but he certainly did a fantastic job entering here. And you said he exited. So the entry was on Monday, right?
Yes, it's still on hold.
Yes.
So here he suggested his take profit. I mean, at least what he informed us about.
I see. In the value, in the value zone.
Yes,
might get it. Might
in the middle of the value zone.
Yeah, might. Just keep in mind that the value zone gets higher every bar. It pulls up closer to prices every bar. So if you leave this target long enough, the target will be below the value zone. So just my advice to review that. It looks very attractive. It's on the weekly chart. Netflix is a week ago there was this crazy rally towards the upper envelope, and now it's just hanging way off of the rally peak, not doing anything much. Turning to the daily chart on the right, Monday the US market was closed. On Tuesday Netflix fell. Today, just as I said earlier, today is a boring day. Nothing much is happening, but there it is. Excellent entry. I see. I would like to know how the guy decided to shorten that, how to set up that point. I would have been waiting for a false breakout, but obviously there was none. So he must have had some other system, which is perfectly fine. And now he is waiting to take profits. Also makes a lot of sense. If we look on the weekly chart on the left, we can see this kind of finger to the sky. And markets usually trade against those fingers. So it's normal to expect a further decline. Into the value zone, wonderful. Be sure not to get greedy, because it's easy to say to say, oh, I want to be exactly in the center of the value zone. Well, what if it doesn't get to the center? I'm very permissive with those things. I will often take profits earlier than planned. Not very often, but often enough.
Alexander, we already got, let's say, some comments in chat. So just from people who participate quite often on our classes. So yeah, this trade might be suggested not according to the fully Alexander system.
Right.
And here's the question about impulse system, right? So we see that it's green. So how
illegal, yeah.
Yeah.
I would suspect that the guy was sitting in front of the intraday chart and trading off of intraday chart, and then took the trade overnight. Absolutely. I opened the chat myself now. I see Veselina says that. Green. Olga says that. Both are green. Yeah, both women are completely correct. But in the classical impulse trading system, both are illegal. I suspect that what the guy did is he basically day traded into it. And I sometimes do that. I will put on a trade which I intend to hold only a couple of days. And the weekly, I could trade against the weekly and against the daily. I just want to make sure that the dynamic is correct, that prices are not hitting. Well, I want to see some intraday weakness, primarily to see that the last price is below the open. Although here in this case, even the last price was above the open. So, but again, it's not my trade. I cannot really explain it.
Thank you, Alexander. And maybe, so yeah, thank you for your thoughts. Thank you for this overview. I mean, from your point of view about this position. And I think we can jump to other stocks and to look at them.
Sure.
So the first stock which I added is Tesla. Just because of this huge rally for previous months.
Yeah. I traded Tesla yesterday, tried to sell it short and ran it. It started going against me. I had a tiny loss, and I said, no, Alex, don't stand in front of the bulldozer. So I got out at a really, tiny, small, ridiculous loss. And I can see today that had I held it, it would have been a profitable trade by now. But it's look at the weekly chart. Look at the weekly chart of this Tesla, how it opened. Remember, it's only the second trading day because the US market was closed on Monday. So it opened on a slight up gap, put a finger to the sky, and right now it's trading below where it opened. So the weekly bar basically says, consider shorting. Cannot do it for position trades because the impulse system is green. We look at the daily chart. The daily is already, impulse system is already blue. There's a wide range break. Today, Tesla opened above yesterday and been swinging down all day. It's now below so it opened above yesterday's high, and now it's trading below yesterday's low. That's a pretty convincing reversal day. What drove Tesla up? There is really not a clear sign for that. I think just a whole bunch of gamblers got together around it and ran up the stock. But I think the rally has reached a resting point.
Thank you, Alexander. Let's look at another company. It's Adobe.
Yeah, Adobe. It's very big in AI. Very big in AI. If you look at the weekly chart, last week closed very strong. This week it opened below yesterday's close and now trading all the way down. On the daily chart on the right, a finger to the sky, I was actually looking at the stock. I was looking at all this. I think there is a lot of insanity going on with AI stocks. So I'm actually looking at them and looking for shorting opportunities, very short term. And I've been doing it last couple of weeks. I'm doing well. I'll say a few words about AI. AI is a hugely important invention. AI will change our lives, similar to what having emails did, having Wi-Fi did. You know, this really major changes. But stocks have been run up. These stocks have been run up out of any proportion to reality. Nvidia is trading at something like 30 times sales. We'll look at Nvidia later and I'll comment on that. But Adobe, yeah, I'm looking to sell it short. I didn't get, I had an order earlier today. I didn't get it. Stock is sliding without me. And I think it really wants to hit its value zone. The impulse system is still green on the weekly. If you're planning to hold this trade for more than a week, you certainly shouldn't go near it. If you're looking for something for 2 days, for Thursday and Friday, it's a possibility. CCL, I think, is match. It's dating must be back in fashion because it is really primarily a dating website. So you can see how as match slid lower and lower from well over $100 to below 30, you can see how this tremendous bullish divergence has developed. MACD histogram, MACD lines, and force index. The impulse system is green, so it's legal to buy on the weekly chart. If you look at the daily chart, look at this massive MACD histogram near the right edge. Basically shows tremendous, essentially buying panic. And on the right, you can see how just today price is coming back into the value zone. Even better, it came into the value zone near the open, and it's now trading above the opening price. So it's really moving into a legitimate buying opportunity. The weekly doesn't cooperate, the daily does. So if you're a position trader, you should wait until the weekly impulse stops. Correction. The weekly impulse is green. So, please scratch what I said. We're looking to buy. So the weekly impulse is green, buying is legal. We're looking at the daily chart. It stabbed the value zone. The impulse is blue. Buying is legal. So at this point, really, the two most important topics to discuss would be, first of all, where the stop will go. According I don't see the numbers on the screen, but I take a quick look at my software. One ATR, one average true range, is approximately
1.5. I have it here in the bottom of chart.
You have it, great. 1.5. So 1.5 means that my stop should be at least 1.5 ATRs from last. So 1.5 ATRs is a little over $2. MTCH is trading at 41. What is it? 90 something?
41. No, it's
41. 41. So 1.6 multiplied by 1.5, so the stop should be approximately 2.5 points below. So if we go shopping at $41, the stop should be about 39.50. I think this red line is a little low, so maybe a little bit higher. Well, yeah, something like this. Yeah, plenty of room. Plenty of room. Great. Very interesting pick.
Thank you, Alexander. And another companies. So we looked at them also previously. One of them is CCL. And yeah, let's start from it because it's jumped again.
CCL, it's the company behind the ticker is Carnival Cruises. Carnival Cruises. I'm not a cruising fan. Being on a huge boat, it's like being in a big apartment building to me. But lots of people like it. And what's important to understand, the worldwide phenomenon now is what they call revenge travel. We have been, many of us, most of us have been locked up for 2 years because of this pandemic. And now that restrictions have been dropped, people are traveling like crazy everywhere. Cruises are full, airlines are full, hotels are full, prices are very high. So this is revenge travel. And this company, Carnival Cruises, it's the cheapest cruise line in the United States. So it's like people's cruise line. So revenge travel is really driving it high. And that's how the stock ran up. Now, with all of that, with all this wonderful run up, I see that the bull market in the stock may well continue, but I think we're likely to see a pretty serious correction before this run up resumes. Just look at the weekly chart. You can see this tremendous bar that did more than in 1 week that previously it couldn't do in a month. Kind of revenge rally. And what happened this week? CCL opened pretty flat and ran up to a new record high, could not hold the altitude, and it's now trading on a weekly chart at the week's low. So it does look to me that it's really setting up for a pullback, even on the weekly. We go to the daily chart, and we can see that the pullback has already begun. Again, the impulse system is green on the weekly, blue on the daily. If you're looking for a long-term position trade, you cannot trade it now. If you're trading it off of intraday charts, that could be very interesting.
Thank you, Alexander. And also I added, let's say, more or less similar company. It's Norwegian Cruise.
Norwegian, yeah, that's more upscale. Norwegian Cruise Lines. One of my trader friends told me a long time ago that in trading stocks he had something that he called the cockroach theory. If you see a cockroach in your kitchen, they don't go alone. If you look carefully, you will find more. So cockroaches go together and stocks go together. So if one cruise line doing well, the other line is also doing well. You can see, by the way, Norwegian is stronger. CCL is trading near the bottom of today, and Norwegian is trading near the high. Later in August, I will be driving and taking a ferry to Newfoundland in Canada. It's far north. The ferry takes 17 hours. I wanted to go earlier in August, but I didn't want to sit in a chair for 17 hours. So those ferries have cabins. There was no cabin to be had until the end of August. So people are shopping for this stuff. No, that's not a cruise. This is just one crossing. But I couldn't get a cabin. Nothing available. All sold out until the last week of August. So revenge travel is on, and prices are high, and companies in travel business are doing very well. Here's an example.
Thank you, Alexander. And another stock from another industry is Ford.
Ford made a deal with Tesla that one of the advantages of Tesla is that they have a network of charging stations across the country. Generally, one of the big problems with electric vehicles in the United States, at least, it's probably different in a place like Norway, but serious problem in the US is that there are really few charging stations, and the speed of charging is not all that great. But Ford and General Motors and another company, Rivian, I think, they all made a deal in the last few days with Tesla to use their charging stations. So it's good for Tesla because they obviously will get paid for it, and it's good for these companies because it will be cheaper than building their own. So Ford jumped on that, but it doesn't look too happy on the weekly chart. If you draw a horizontal line, Roman, let's say across November peak, yeah, something like that, you can see it's like this level, which is about $14.50. It's kind of a barrier in the sky, and the stock has the Ford stock has already hit that barrier, and you can see how it's declining back towards value zone. And I'm scratching my head and I'm saying, is this well, it's clearly a correction, but is it a correction within a bullish trend, or is it because the weekly chart already lost its additional power and the stock is ready to become weaker? Hard to tell. You know, some stocks give you a very clear picture, and you saw examples on several stocks today. Tesla, Match. This one is much more foggy. And when you analyze markets, you know, if somebody gives you, here is the difference between the markets and the rest of your life. Somebody gives you some kind of puzzle. Your wife asks you to build something. Your boss gives you an assignment. You don't know how to do it. You're going to find out how to, because you have to do it. In the stock market, if I see something that puzzles me, I just brush it off and go to the next one. Don't force your answers. The information you have should help you with many trades, but it doesn't have to help you with every trade. It won't.
Thank you, Alexander. And another company is Advanced Auto Parts.
Yeah.
And I will show you why I suggested to look at it. I will go to weekly chart and do like this.
Mm-hmm. It looks like at 70, 75, 79 level, there is a pretty major support below the stock. Right now, the stock represents a falling knife. It's just lower, lower, lower. But if you look at the very last bar, at this little short bar on the right, You can see how it opened below last week's close, fell, and now it's rejecting that low. Let's take a look at the daily chart. The question is, should you or should you not rush to buy? If you like what you see, if you like this analysis, if you're bullish on the market overall, you can buy it and just use good money management. But I generally I'm not a big fan of buying things after they had a severe drop. They may need to vibrate a little. In any case, shopping is legal. If we're in a bull market, then we should be buying declines during bearish breaks, correct? So that's what I would be inclined to do.
Thank you, Alexander. And maybe, as you mentioned about Nvidia, so pretty much...
you read my mind. I was going to suggest, let's do Nvidia. Here is the absolutely insane number. I mean, the stock is obviously very important. The stock is producing chips which are essential for artificial intelligence, for AI. And the stock price has run up just not in a very long time. It ran up from $120 to $400-something. So it's basically it better than tripled in less than a year. But, and it's very serious but, prices of stocks reflect their earnings and future outlook on earnings. Looking at the stock Nvidia, it's very high price. It's over $400 a share. Represents 29 times yearly sales. Well, what does it mean? So let's say it means that if the company is earning $100, let's say it's earning $1 million a year. The value of all stocks in that company will be 29 million. So essentially, if Nvidia takes 100% of their income, doesn't deduct without any deductions for clothing, for medicine, for whatever, without single deduction, every single dollar goes to earnings. Then in that case, the price sales ratio for Nvidia would be 30. So 30 times yearly earnings. Where there is something for a poor trader who wants to buy some stock, it's just fundamentally it's in a ridiculously expensive place. And I've been, for the last couple of weeks, I've been nibbling at this thing, shorting it every chance I get, and quick to run if the next day I turned out to be incorrect. But by and large, I'm pretty steadily trading the stock and winning, of course, most of the time. On the weekly chart, we see this potential reversal, very big business. On the dnevной chart, on the right, we see a sort of strange-looking divergence of MACD histogram. We see a clear divergence of force index. But the most important thing is that the stock is touching its upper channel line, which is a very, very, very overbought zone. So I'm short Tesla. I'm short Nvidia as we speak, and I shorted it last week as well. So we'll see. I could be wrong. Stranger things happen. I certainly don't possess any kind of magic crystal ball to forecast the future. But when I look at this thing, I look this crazy rally, insane rally, 1, 2, 3, 5 weeks above the channel. And how high above the channel? And what's happening this week? Opened high, took out previous week, now trading lower. On the daily chart, There is a bearish divergence of MACD histogram. But it's an emotional stock. It really runs on emotion rather than anything else. And a little shorting is good for the soul.
Thank you, Alexander. I think we covered, let's say, all plans for today, what we planned. And for questions, I will ask for our participants to leave them on our YouTube channel. We'll do it later. And just to warn, let's say, also our participants, so we're going to have, let's say, summer break for July, and next our class will be in August.
I saw one question when I logged into chat. This person is asking for intraday trading. Do you use triple screen method? Yes, I do. Are you using 25-minute, 5-minute, and 1 minute for precision entry? I don't go to 1 minute. It's way too fast. It's way too fast. At 1 minute charts, you know, you're really getting underfoot with flow traders. I make my strategic on the 25 minutes, tactical on 5 minutes.
Thank you, Alexander.
Thank you. Enjoy your summer.
You too. Actually, we had, let's say, 27 today in Tallinn. Can you imagine? 27.
Yeah.
Probably it was I think it might be, let's say, the only one day of such, let's say, warm here.
27. Well, no, it's. I was talking to someone. I was talking to some Americans today. These guys came. They're going to be putting asphalt in our parking area, and they talked about Estonia. Said, "Oh, do you get 30 degrees in Estonia? Do you get 25?" I say, "Well, we may get one day 25, but 30 is certainly not on the menu." Yeah. Well, go have a swim in the cold Baltic.
No, not for me. Thank you, Alexander. I also wish you a good summer. Thank you for a class, interesting as usual, and see you in the next class in August.
In August. Looking forward. Thank you very much. Best wishes.
Thank you, Alexander. And dear participants, as I promised at the beginning of our class to say some words about indicators and about our contest, just we'll use, let's say, these couple of minutes to share with you. So firstly, we in Admirals, we provide Alexander's indicators for our clients. You can use them on MT5 platform. It's available for all Admirals clients with a real account and with balance on it more than 200 euro. So everything you need to request is just to send an email on elderdisk@admiralmarkets.com. I will share a link right now in our chat for those participants whom we have here in Zoom, and for those whom we have on our YouTube channel. So it can be found in, of course, in the description of the video. So I'm sharing right now. So everything you need is just send a request, and if you already Admirals clients, we'll send it back to you indicators, chart, templates, and video tutorial. And for sure, I'm sharing right now also the recording of one of our classes which we had previously with Alexander, where he had a detailed explanation of how to use his indicators. So I'm sharing right now also to our participants in Zoom, and for YouTube listeners, it will be available in description. So, and if you're not Admirals client so far, and if you're planning to be, so just send a request, and our customer support specialist will help you to open an account and consult about all possible questions you might have. And also about contest. So as I mentioned, so today we discussed about one position on Netflix, and we have, let's say, this great prize, the latest book of Alexander, The New Trading for a Living, with his personal signature. And we have this prize in our contest. So it's a really gentleman contest, which we have on our YouTube channel. Right now, I'm sharing a link to our YouTube channel, and if you're not subscribed so far, you can do it. And besides of recordings of our classes, which can be found there, we'll also have a market talk sessions there, and also different educational content which is available on our YouTube channel. So I highly recommend to subscribe you there. And under each video, we have, let's say, this content. So here it will be a video with the title planned for August, as we will have the next session in August. So you saw example, and I will try to explain the key rules. So firstly, to participate in this contest, you have to be subscribed to Admirals YouTube channel. You should like the video with the recording, of course, and in comments suggest one trade for one asset that is traded in Admirals. So we have, let's say, more than 5,000 different instruments. So you pretty much you can find pretty much everything. So in comments about this position, so you should suggest entry price, instrument, entry price, stop loss level, take profit level, and leave a date of post of when you suggest, let's say, this trade. So we have a longer time frame as usual for this contest because, as I said, we'll have, let's say, a short summer break for 1 month in July, and we'll back to our classes in August. So we have a time period from 22nd of June till 23rd of August, like pretty much 2 months to participate in this contest. So plenty of time to participate, and your trade can be, I would say, for 2 days, for 3 days, for 2 months, for 2 weeks, sorry, for maybe 1 month. I mean, across your expectation. And how we choose the winner? It's really simple. So the position which will have the longer distance from entry to close, then this will be a winner. So super simple. Of course, we take a preference, give a preference to suggestions where position was executed by take profit. So if take profit was executed, so you most likely will be on list of winners. And if it's not closed, so we took position where it's, again, it can be an open position, but the percentage of movement is higher than from others participants. So you can check, let's say, previous recording to see how other participants suggested their trades, to see and to get, let's say, some examples. And last but not least, it is prohibited to edit comments. So if it will be a sign that it was edited, so we will be not able to count, let's say, such suggestions in our contest. Of course, as I said, it's a gentleman contest. It means that it's, let's say, paper trading, which allow you to think about, let's say, your position, about overview of your position. And of course, we think that you can use, let's say, Alexander indicators and his approach to implement and to add additional value to your personal system. So that's why we do this class. That's why we invite Alexander each month to get his knowledge, his opinion, and to understand how he sees the markets, to try to apply his thoughts to our own trading systems. Because as we know, it can be a lot of traders, and there is no one trading system which is suitable for all traders. Anyway, we are trying to apply it on ourselves, on our experience, on our instrument preferences, and other a lot of things which we need to keep in mind when we are thinking about positions. But these classes are designed to help beginners and middle-level traders and advanced traders to increase their confidence during the market analysis and taking decisions about positions. So that's it for today. I'm really thank you, all of you, for participation. If you are on a YouTube channel, don't forget to like this video, of course. And I wish you a pleasant evening, a pleasant summer, and see you in August. Thank you very much, and goodbye.